Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about Nvidia Corp, and they trade on the NASDAQ under the ticker symbol NVDA. Nvidia is one of my all-time favorite stocks. They continue to outperform absolutely everyone, and I just love them as a company because they continue to grow and grow incredibly profitably. That being said, earlier this year and late last year, we saw the stock have a pretty substantial decline in line with some of the broader tech moves. So if you actually look at a chart and we break this out over a 3-year time period, you can see that we actually had very steady growth from May 2019 all the way up until, we'll call it January of 2021. And that has continued to be a very strong trend. So despite the fact that they had a huge run-up following news that they were going to be doing a stock split, as well as just a large overall tech market increase, that has kind of settled back down. Keep in mind that the company has traditionally performed very well after earnings, which makes sense due to the fact that every single earnings that they've had, they've announced more than 50% growth on profit margins that are in excess of 60%. And that is on the growth side. So what we're highlighting here is every time that they say next quarter we're expecting to grow another 50%, they're keeping nearly 65 cents out of every dollar after fixed expenses. So what you're looking at there is that they have a lot of money to continue to reinvest for their shareholders as well as for the business. So this growth is actually a lot healthier now without that spike. However, I want to highlight a few things going forward. So for their presentation that they had for the Q3 earnings, they highlighted that their earnings expectations would be on revenues of about $7.4 billion. So what that would expect in terms of the total earnings estimates is that would put them around 1.22 on total earnings or total net income of around $2.5 billion. So keep in mind, again, that is still some crazy high margins on the net income side. So we'll be watching to see how well they perform going forward with those expectations. So what we're looking at right now is that earnings to be announced on February 16th. However, I do still have some concerns over their current valuation based on the broader market. So something that industries have never, or rather for the past 5 years or so, had not had an issue paying, is a very high PE or price to earnings ratio. You can see that Nvidia right now trades at nearly 3 times the industry average of 26.66 by trading at nearly 74 times price to earnings. What I want to highlight right now is that this ratio right here is created by taking the prior 12 quarters and essentially adding all of those up and dividing the price by those earnings. So what we could see is that Nvidia, based off these current metrics, if they expect to have this upcoming quarter be reflective of performance similar to the last quarter, which historically or the time period between September to December is the largest for most companies, or rather for Nvidia and a lot of other chip makers, you can see that their expectations is this is going to be about 7.5 billion, and that total operating income, or rather that net income down here below of 2.4 is probably going to be closer to about 2.6 billion in terms of net income. So keep in mind that that is after tax. So the expectation that we could see associated with Nvidia going forward is that they would sit somewhere around a price to earnings ratio of around 70 to 71 would be my expectation. So we're not getting a huge discount when it comes to valuation. However, we would see probably a drop of another 2 in the price to sales, which is simply taking the prior 12 months and showcasing that the current price divided by their total sales during that period of time. You can see again that they're trading at more than double the industry average. Now, that being said, something that we have seen from a lot of the companies in the space is that they continue to grow and they continue to do well. However, when companies tend to not perform up to expectations, you can expect to see a sharp drop in the overall valuation. So what I would expect to see from Nvidia, due to their high levels of pricing right now, is it's largely going to be acting as a leveraged fund in terms of upside exposure. So if you look at the charts right here associated with the company, and I expect their earnings to be stellar, the upside potential is largely going to be limited to how the market performs. A company that I would use as an example would be AMD, who announced incredibly good earnings. What we saw is a very strong trading opportunity for AMD, and I expect to see something similar for the company here with Nvidia. What I would highlight is you saw the stock of AMD go from total shares of prices of about $115 a share all the way to as high as $130 a share the following few days. However, since that point in time, the stock has dropped back down to about $115 a share. And that was largely driven by overall market experience as opposed to being specific to AMD. I'm expecting a lot of similarities between their performance and what we can expect from Nvidia. Nvidia has a lot of very strong businesses that are performing or going on all sorts of very strong exposure right now. Chief among those would be the data center side of the business, which is largely originating from their Mellanox acquisition from nearly 2 years ago. Some of the things that we would also expect to see have growth would be the auto platform, because most of the auto exposure has continued to show very, very high demand, but it's something that actually dropped last time they announced earnings due to the fact that there was a number of supply chain concerns and the companies just weren't able to produce as much. So the question going forward is, will we see some of that weakness in auto come through? Keep in mind, it's a very small percentage of the overall revenue, and we would expect that gaming would continue to outperform as well as the data center. So as long as those two business lines are continuing to perform incredibly well, then the other smaller business lines are not necessarily going to be as much in focus, such as auto and professional visualization. So the question will be is, if the company hits their numbers, will that be good enough, or will they be dragged down with the broader market? At this point in time, due to the fact that we've seen such a large decrease from their highs, again, coming around $340 a share less than 6 months ago, the expectation is the company will continue to act as somewhat of a floor around that 215 time or that 215 level. The question going forward is, will they be able to have another run up, especially since one of the key macro items that was really going for Nvidia was the potential acquisition of ARM, which due to a lot of regulatory pressures has been shut down. So keep in mind that this company is looking to have just around total revenues for the fiscal year of $25 billion. The reason I want to highlight that is because their total revenues going forward of around $25 billion is what is supporting a market capitalization of more than $600 billion right now. So there's still a lot of air right there. The question is the overall market going to continue to perform well? Because I highly expect Nvidia to perform well, but there's a large gap between current total revenue and current market capitalization, and that can be risky going forward. That being said, I really like the company, and there's a lot of value associated with it. At this point in time, please recall that I am not a financial advisor. I'm just some guy on YouTube. So feel free to do your own due diligence, but I hope you found this video helpful. And if you did, please leave a like and subscribe. It really helps the channel to grow. Thanks. Talk to you later.